Well, this you probably already know. You're in the webinar on EU sustainable taxonomy. Welcome again. I'm very delighted to be able to share this knowledge with you, even though we're in difficult times. We do have a lot of additional challenges, but I think the environmental challenge is still very relevant and will stay relevant after this crisis that we're currently sitting through as well. So as I said, and now yes. As I said, we have 3 blocks. So the first is I want to go take a bit of background, like why do we have this taxonomy? Because I feel that's important to realize. Then I will tell you something about the report, some shortly on the technical criteria, but I will zoom in into the usability because I think that's most relevant for most of you. And then I will basically close with what is next, who has to do what by when, and how is this all going to work. Now you see a picture of happy people. We had to be flexible last week as well, and this is the team that we did the EU webinar with 1 week ago, exactly 1 week ago. We were still able to travel, so we traveled to Brussels with a small team to deliver the stakeholder dialogue digitally. And this was the team that we did that with. So we all look very happy. It was a nice experience actually to kind of discover new ground and get this done. We had over 15,000 participants from all over the world. So that was very interesting to see how you can reach a big audience with digital means actually. Now back to taxonomy. Why do we need it? Let's go back to the basics. I think we all need, and I think most of you are working in sustainability, so you're probably very well aware that we need a transition to a cleaner economy. And I think this picture clearly shows that we're reaching thresholds, we're crossing planetary boundaries. And we know once we cross 1 or 2 or 3 or even more, that we will create feedback loops that might be beyond our capacity to deal with. And needless to say, that's what we're trying to prevent. And so there's an urgency on environmental challenges. And by environmental challenges, I don't mean only climate change, which we've been obviously focusing a lot on as a technical expert group. But I also think about biodiversity, water quality, land use, things like that. Circularity, very important. And so I think, as I said before, there's a current urgency to back down this virus. But I think there's still, it doesn't take away the urgency of these planetary boundaries. We're currently giving the Earth a small break. And well, I hope the work that we've done will actually help in building up our economy afterwards towards a cleaner and more sustainable economy. Now, you all probably know these pictures, and you're probably also very well aware that even though we've all seen these pictures, the actual action on the Paris Climate Agreement's goals is not overwhelming. And so, the question that you have to ask is why are seeing these pictures not enough? And so I think what we're trying to do with taxonomy is we're trying to design a tool that translates pictures like this and other scenarios like from IEA or IPCC, I'm sorry. We're trying to translate these pictures and scenarios into market-friendly tools, and we're hoping taxonomy can serve that goal. And as I said, for the reasons, as I just said, the interrelationship between these challenges, the EU has also chosen not to focus only on climate mitigation and climate change adaptation, but also on water transition to a circular economy, pollution prevention, and ecosystems. And so I think what is essential if you have these topics is that regulators set clear goals in how to reach them. And now we've had that for climate change. We know we have to reduce our carbon footprint by 50% by 2030. We now know, hopefully with the new climate law as well, that EU will strive to be the first carbon neutral continent by 2050. So that's a very clear goal that you can work towards too. The EU is currently also working, for example, on a clear policy goal in circular economy, where it says by 2050, 50% of the produced goods has to be circular. And on waste, they're actually saying by 2050, we don't want any waste on land and water. So those are clear, like quite ambitious goals, which reflect the urgency of the current challenges that we face. Maybe shortly to zoom in on the two goals that we worked on, because as you probably know, we haven't worked out the whole 6 goals. Our task was to do climate mitigation, climate change mitigation, and climate change adaptation. Now, as I just said, climate mitigation, you see the goals here, and climate change adaptation is really focused on building capacity and increasing resilience of the facilities that are under physical risk for climate change. Now, I think some of you might think that the thresholds in our report look very challenging, and obviously they are, but what I wanted to illustrate with these slides is that, you know, the challenge that we face are also big and ambitious, and that is what we strive to reflect in our report and in the thresholds and technical criteria that we have drafted. Now, if we look at a bit more of a breakdown into climate mitigation, you see that it also means that we have to increase the share of renewable energy. We have to decrease our energy or increase the savings of it. And so until 2030, the European Investment Bank, actually these are simulations of them, have estimated that we will need a yearly investment, a private yearly investment between 175 and 290 billion. Well, that is, there's bad and good news. I think bad news, this might seem a lot. The good news is we know there is a lot of money in the markets currently. And also there's a lot of money that is currently underutilized, that is either being saved or invested by very low returns. And yeah, I obviously know at this moment the returns are even very bad, but this is, you know, obviously if you look at the past years, there's a lot of savings that haven't been returning the earnings that they probably could. Or haven't been invested at all. And I think that is, if you look at the plans in the current sustainable investment plan, it's really focused on getting asset owners into the game of financing sustainability and getting especially private savings or small asset owners to understand and to get the transparency that they need to move into these, or to contribute actually to these environmental goals. Now, this is from the 2050 strategy paper of the European Commission. And we've said taxonomy is a tool for transition. And obviously, if you say it's a tool for transition, there is a journey to be undertaken. And if you are going on a journey, it's very good to know when do you want to be where. And so these kind of scenarios helped us a lot in defining the thresholds. You see that the reductions in different sectors are extremely steep, not cheap, steep. And you see that the reductions mainly need to come from a rather small list of sectors that are very highly CO2 intense. And as it's obviously not a coincidence that these are the sectors that we had to look, or that we have looked at in the taxonomy as well. Maybe quickly draw your attention to the red bar, like the below red bar. This is carbon removal technologies. I know that many of the scenarios in the market rely on carbon removal technologies, but as this picture shows, these are actually, they're not yet fully operational. And we're only expecting them to develop from 2030 on in a significant means. So that means that, you know, until that time, we can't really wait for technology to save us. We will have to take effort into reducing the carbon emissions of the sectors that are actually listed in this picture. And yes. Now, I think if you, as I said, we have tried to design the taxonomy as a tool for transition. And so what we explicitly didn't want to do is just list the already green things, because most of us already know quite what that is. And so these are basically the, well, the we just discussed what it is. This is basically the rationale of the tag, like the main points that we took, the starting points that we took on our analysis. And I think a few things that I want to highlight. I'll give you a bit of time to read the slide. Now, what I want to highlight, what I think is important to know from our thinking, is that what we've tried to do explicitly is give bond markets a very important, or the rationale enables bond markets to play a very important role in this transition. And why is that? That's basically because we have added, besides turnover, revenues that many of us use to kind of measure the greenness of our investments. We do that at PGGM as well for our SDI taxonomy. We have decided to add capex and possible opex as a kind of forward-looking indicator for a company to green their facilities. And I'll come back to an example later in my presentation. But we've basically said, if you have a project that greens your operations and you have a strategic plan that enables you to reach the taxonomy thresholds, you're able to count the loan as green even before your operations are already fully aligned. I think that's a very important point. The second important point is that what I want to make is that not every activity is sustainable. So you won't find, I don't think, even if it's in its full form, the taxonomy will cover all of the activities in the economy. It's really about which activities can make a substantial contribution to greening the economy. And that, again, doesn't mean that not every improvement is needed. Of course, we need every improvement, but it won't be taxonomy eligible if it's not substantial. And why is that? That is really also to avoid lock-in, because the risk is there if you would count small transitional steps in high emitting sectors as green without having a clear plan to upgrade this facility and align with the taxonomy thresholds. We do run the risk that we actually lock in dirty assets longer than we would want to, and that's what we wanted to prevent. Now you're all familiar, probably those of you who have followed the development of the taxonomy. This is the very basic, and it hasn't changed from our last report. So every activity that's included in the taxonomy basically needs to substantially contribute to one of these 6 environmental goals. It can do no significant harm to one of the other goals. This is quite a new concept, but I think it's very useful if you think about the interconnections that I just referred on when I showed you the planetary boundaries. And it needs to comply with minimum safeguards. And I just quickly want to elaborate on that, because originally, in the original taxonomy legislation, that was only the ILO standards. That has really been extended in the last update of the directive. And now it's actually also a compliance with UN guiding principles and OECD guidelines for responsible business. And I think that's in line with many of us already do. It's in line with best market practices. But it's important to mention that with that, there's really they have increased the focus on the social part of the taxonomy a lot. And then just quickly, if you haven't had a chance to look at it yet, we have produced 3 different products. The first of all is a summary report. It's quite doable. It's around 50-60 pages. It includes the key concepts of our thinking, our design decisions. We extended the guideline for investors compared to the last report that we published in June. And we also included our learnings on how could this taxonomy serve as a basis for internationalization? And also, what are our learnings if you look at the future development of the rest of the taxonomy? Now, then the second part is the scary part, the 700 pages of technical criteria. I don't think you need to read that all at once. It's more meant as a encyclopedia, a dictionary, to look up the activities that you want to invest in. And I think therefore it's very useful, very detailed. And to make that even more useful, we have actually produced a taxonomy spreadsheet version as well that includes all the criteria and is also more workable in your analysis. So we've really tried to make it accessible for market participants as much as we could. We've also added some tables for that translate some of the main economic classification systems towards the NACE codes, another way around, because the NACE code that we use for taxonomy is not the coding that many of us investors use. We use GIGS often, or BIGS, so we've included some of these translation tables as well. And I think that was my first block. If you have, Iris, will you tell me? We have a lot of questions.
Yeah, well, we open the floor for questions, so please
Yes.
put questions in your Q&A button. So again, if you go with your mouse on your screen, you see a Q&A option icon in the bottom of your screen where you can leave questions. And Brenda, thank you very much for this first introduction, for this first block. And I was wondering, because you said taxonomy is all about activities which are substantial and not about the one which are non-substantial. Can you give an example of something which has taken quite some discussion, maybe if it was substantial, yes or no, or and which fell out, or maybe just was included in the taxonomy?
Yeah, yes, of course. I think, you know, there are many small, like, for example, if you would have well, there's a very obvious example. If you make a coal plant very energy efficient, then it's still a coal plant. So that falls out on the basis of the exclusions that we did. We are also aware that there are many sectors, you know, retail or other sectors that don't do that much damage. So there's also not so much of a improvement potential. So yes, a very clear discussion that we had is that, like, indeed, if you have a factory and you run it on green energy, is that really a substantial improvement or not? And in the end, we said, well, it really depends obviously on the product as well, but often it's not substantial enough to be counted as a taxonomy aligned activity.
Thanks for that. Yeah, we have a question is that someone says, okay, there's 6 objectives. When can we expect more objectives? Can you say something about that?
Yeah, I can. Well, we first have to finish the other 4, so let me start with that. And I think that's going to happen this year, hopefully. Still, and I think I'm just assuming that you'll refer to, for example, a social taxonomy. Now, the last version of the directive that was negotiated includes a review option of the taxonomy in 2 years. And that would include an option for social taxonomy, but also an option for a brown taxonomy. So at the earliest, in 2 years, we would have additional objectives.
Maybe that's a nice bridge to the second part of your presentation. This is your final report of the tech. There was also a tech report in June. Was it in June?
Yeah, it was June. Yeah.
So what's new about this one? What has changed compared to the other one? I think that's the follow-up of your presentations. About right?
Yeah.
So please continue with that, and then we go to the next Q&A later.
Perfect. Let me see. Yes, there we go. So yeah, indeed, what has changed since June 2019? And mind you, we've been working now almost for 2 years in this constellation. We've been prolonged for 2 times. And we've done 2 rounds of feedback. The last one was after our presentation in June, and we've received over 1,000 reactions on that. And based on this feedback, which is largely from the industry sectors themselves, we have updated the 17 mitigation activities in the report. And we've also additionally created adaptation activities. So if, for those of you who can remember the last report, it was really process and principle based if you looked at adaptation. And we've extended that with 68 activities, including also do no significant harm criteria or do no significant harm to mitigation criteria. We've also extended the guidance for companies and financial participants. That was also necessary because in December, the scope of the taxonomy regulation was substantially extended to all financial products, but also companies that fall in the NFRD will have to report in line with taxonomy. So we had to update this guidance in line with the latest result of the negotiations. And we've added, as I just said, also some learning on international harmonization and future taxonomy. As you will see, the structure is largely the same. Also, the structure of the activities and the technical criteria is largely the same as we used in the last report. Now, this is just a quick overview of the activities. You see that there is many activities that include gas, electricity scheme, water, transport, agriculture, manufacturing. I'll come back to the insurance and engineering services later. If you look at adaptation, they have a special position there. Yeah, I think this is very much just quickly to read. I'm going to give you some time for that. Now, just if you have had the chance to look at the different sectors, you will probably have seen that the approach per sector differs slightly. And the sectors are so different that we had to find a way to define substantially contributing really in a sector specific way. And so what you'll see that, for example, for transport and electricity, we've been able to set basically universal thresholds. So we said for transport, 50 grams per passenger per kilometer is the minimum, and that should reduce over time. Now, for electricity, that is a similar approach where we said the maximum amount of CO2 emissions per kilowatt hour should be 100 grams CO2 emission, 100 grams CO2. Now, that's because for these sectors, we had quite clear scenarios and we knew quite good what they should reach. If you look at agriculture and buildings, for example, that's different. The approach is different. It's often smaller steps that they take to get towards Paris alignment. And so you'll see that in these sectors, it's also possible to sometimes finance smaller steps in the improvement of the processes and call them green. And then for manufacturing, as you will see, we've focused on heavy industry. And there, clearly, we have looked at what are the possibilities to include circular aspects in that, but also how can they reduce CO2 and how does that have to look over time? Because clearly you're not going to transition a big steel factory from one year on the other. That needs time. And we've taken that into account with reducing thresholds for these activities that are not yet green. Now, I just said I'm going to focus a bit on the disclosures because I think it's important. And this example that we have illustrates the way that our thinking works if you look at the addition of CapEx. So in the last compromise, companies that are regulated under the non-financial disclosure regulation will have to report the alignment of their activities with taxonomy. And this really concretely means that if you're a portfolio manager or an asset manager, you will get the data from the company on the percentage of their revenue that's aligned. That also means that they will have to prove that they align with the do no significant harm criteria. So this takes a major burden that we identified earlier in the process for investors. It takes that burden away for NFRD regulated companies. And I think it's really a big step forward compared to last time. Now, just to give you a quick example, if you look at a steel factory, for example. So this steel factory has three locations, and one is already green. They've put in the newest technology and works. The other two are not, but there is a clear plan to align them. Now, if I'm that company, say if I'm that company, I have a plan to align my factory, ideally within 5 years, we've set as a tag, with the taxonomy criteria. I can go to the bank, present my plan, and get a loan. And the idea is that that loan can be counted as green if that plan works to taxonomy alignment. Also, if the company decides to issue a bond for these specific two projects, or this project, if they put it in one, it would be eligible for a EU green bond standard. That standard needs to be developed still. We've done a proposal for that as a tag. It's not yet in the Commission plans, but the idea would be that the EU green bond standard would be applied to these kinds of bonds, and therefore also enables companies that want to transition also to get green financing, and also to give them clarity on when is something green and when is it not green, basically to lower the bar for new entrants in that market. And so only once the company has fully aligned all of its facilities, it would be able to claim that 100% of the turnover is associated with taxonomy. So it will only show up in the equity side, in the turnover numbers, once the company has done the whole project. Until that time, only the 50% of economic activity A in this picture will count as green revenue. Now, I know adaptation is not a topic that is high on many investors' agendas. It's often the small brother of climate mitigation. But as I've showed in the beginning, we're getting closer to these planetary boundaries on many fronts, or already overshooting. And so I think it's very important to start thinking about, what does adaptation mean? And I just want to quickly zoom in on the two different categories that we have identified, because adaptation in essence is different from mitigation, because adapting a facility is often really dependent on the location and the system. It's not very related to the product that you're producing. And so there are only a few activities that you can really identify as an activity that enable adaptation. And there you can think about like non-life insurance, for example, or specific consultancy companies. The rest of the activities would really be an activity, like say if I'm a steel company, I'm based on the Dutch coast, I know I'm very vulnerable to flooding risk. And in this project that I just mentioned, I want to take up a certain amount of money to also increase my resilience to flooding. That would count as green, but we would only count that CapEx as green and not the turnover of the company. And that is because it's really mostly a one-off project. It doesn't really reflect in the production numbers, like the revenue numbers afterwards. This was really a very complicated puzzle to get together, to be honest. So now,
Brenda, just
yeah.
a practical question, because I think people wonder if they can receive slides like this so that they can have a closer look at it.
Yeah, sorry, this is a very, very big slide. Yeah, I'm sorry. Yeah.
Is it
Sure.
okay for you to share the slides with the participants after?
Yeah.
Okay,
Yeah.
Thank you.
Yeah. Yeah. No, sure. This is also, I think, in the report, if you would want to look it up. I know it's quite a lot to take in, but I think in essence, what you should remember from this slide is that unless you're a consultancy or in non-life insurance, for adaptation activities, you can only count CapEx and not revenue. So that's, if you want to remember one thing of this, I'm sorry, too big slide, that's the thing I would want you to remember from it. Now, this reporting obligation for companies is only for NFRD related regulated companies, and you probably all know that doesn't cover everything. In particular, it doesn't cover SMEs, very relevant for banking sector in particular, but it also doesn't cover private equity companies. And that means if you're screening a portfolio, like for example, PGM's portfolio that includes all different asset classes, a global portfolio of private equity as well as public equity as well as debt, you won't get all of the information from the companies. And so for some companies, you will still do the analysis yourself. And for that, we have designed a 5-step process. Now, from our own experience, I know I can say for us, this is pretty much in line with the process that we would follow if we step into directly into a private equity company, which we don't do often, but sometimes. And we have tried to align it as much as possible with current market practices. And so what you will do is, first step, you will identify the activities that could be aligned, and you can choose to do that, for example, on the basis of a screening of the NACE codes, translated to the classification system that you use. Secondly, you can verify the screening criteria. So for these activities that, based on the screening of your codes, could qualify, you check the technical thresholds. Then you verify do no significant harm criteria. Now, in many occasions, this is comparable to doing your environmental DD. So many of the do no significant harm criteria are based on European legislation, and they're hardly ever very quantitative. And the fourth step is that you conduct due diligence on the social minimum safeguards. As I said, this is UN guiding principles, OECD guidance for responsible business, and the ILO conventions. And then based on that, you calculate alignment of your investments on a product level, so on a fund level. Now, we've also tried to be realistic, and we know that, probably the first reaction will be, we can't do this for all companies and we can't be sure. And we know that. So what we've done, or what we have at least proposed to the Commission, is that at least for the time being, until data coverage gets better, we will add a separate category, which is potentially aligned. So there would be activities that you can report for 100% sure, or you get the data from the company where you say, this should be taxonomy aligned. But there will be activities where you can verify the screening criteria, but you can't do the full do no significant harm assessment. Now, in that case, you would put that investment in the bucket potentially aligned, and you could report based on that. That's our thinking. I'm not sure whether the Commission will take it over, but I think that's a realistic way to deal with the data impediments that we're currently still facing. Now, I say calculate alignment of investments on a product level. That looks more or less like this. So this is a very simplified portfolio, as you all know. 3 companies. You look at the weight of the company in your portfolio, the percentage of taxonomy aligned revenues. This is an equity portfolio, obviously. And so then you calculate, based on these numbers, you calculate the full taxonomy alignment. Now, we've tried to make this a bit more realistic. In previous examples, we used 50% or 60%. And I think now with the taxonomy applying to all financial products, this is a much more realistic picture. Obviously, if you are running a targeted fund, you would probably expect the percentage to be higher. Yeah, so that is my second part.
Yeah, and Brenda, we got some questions in from people.
Perfect.
And more questions are welcome. So open your Q&A session and type your question if you have any for Brenda. And already quite early in the process, Remco Blijs left a question. It's like, who will provide and validate all the data of the underlying companies? Do you have an answer?
That's wait, I'm in between them. Oh, sorry.
No problem.
Do I have an answer? We didn't, it is not said that it has to be verified, but obviously that's to be expected. And I think, I know Remco, where Remco works or worked. So yeah, there will be a big business in it. I mean, that is, that's undeniable. And I think looking at the larger trend of the importance of environmental data, actually my hinge would be that, you know, if you look at what happens for financial data currently, is starting to happen for environmental data. So I definitely expect this to be a growing obligation, but also a growing business. Yeah.
And I see a lot of questions that come in. I see that also people put questions in the chat session. It's easier if you put it in Q&A. So please put it in Q&A because we have that screen in front of us. You can also open it, Brenda, and the questions. You can see, of course, we all know, and we discussed it a lot in working groups we have, is that the data part is a challenge. And you see that also now a lot of questions are asked about that. For instance, I see a question come in. How will it be ensured that data coverage increases outside the non-financial reporting directive? Yeah, so there's a lot of issues, of course, going on. Could you say, is there any work done at the moment on the part of getting more data? You know?
Yeah, I think there's a lot of work being done on various fronts. So not only by regulators, but also on the market. I think it's, you know, the increased data reporting in the non-covered sectors basically will come from the increased demand of investors to be able to report this. But that might take time, because it's not like something we have tomorrow. Now there's another option that, you know, there's currently a review of the NFRD. And it's very likely that the scope of the NFRD will be extended. And in that case, at least for European companies, data would become already more quickly become available. Obviously, for international companies, this challenge remains for now. Yeah.
I see I was on mute. Thank you for that. So if you have the opportunity, Brenda, maybe have a look at the Q&A session, because a lot of questions are coming in.
Yeah, I'm trying to click on it, but I don't get it doesn't open.
Okay, well, so maybe what we can agree is that we will save the questions, and that when we send around the report, that we also make a Q&A session that we try to answer all the questions that come in. I think it's could be a nice one.
Yeah.
Someone is asking, has the methodology been tested for real funds, and with how many holdings?
Yeah, yes, we have. Actually, the PRI is running a practitioners group, 50 participants, and they are running on very different portfolios. I've tested it for our own infrastructure portfolio. And yeah, it doesn't surprise you that there was definitely a data gap, but it's doable. There are different ways, obviously, of running it. So we've tested different methodologies. As I said, you can start from, if you have a rather small portfolio, you can probably go through it one by one. If you have a larger equity portfolio, where we've worked with Bloomberg as well to see how do the current ESG funds, for example, score. And there we find not very high alignment percentages. If you look really at the, you screen on based on classifications, classification numbers, and then the available information of the company. And yes, so we've tested it, and I think much of the guidance that we've included comes from our learnings in the testing. It's definitely not where it needs to be to get full data coverage. But I think now that we have the, basically what we've produced now, we're hoping that the Commission takes this on board and will follow our recommendation. And then that means you can already work with these thresholds and start testing and feedback also the Commission on what you're experiencing.
Yeah, because I also see people asking, what about small and medium enterprises?
Yeah,
that's all the worries are, of course, maybe large corporates will provide the data, but what about the smaller ones?
Yeah.
Do you have an answer for that or already?
It's a fair question. No, I don't have an answer yet. It's really something that we will need to, that will develop over time. And I mean, this was obviously something that was decided in a political process. So this was not a decision of the tech to take in these, to increase the scope of this and increase it also to the scope to all funds. That was really a political decision of trying to push the market in a way. And I think in a way, this is still quite a market friendly way to start regulating it, because it's a tool. There's no obligation to reach a certain percentage, for example. There's no obligation to invest in a certain percentage. There's no guidance or obligation on how much revenue of a company should be green. So you can include a company that has 1% of green revenues. So I think, we need to get started with it and share our experiences. And I think we will be followed up by a platform, a more permanent structure on taxonomy. And that will definitely be one of the main focuses of this platform, that how do we get this data landscape aligned? Yeah,
great. Thank you. I see a lot of questions coming in about the data.
So I see the number, but I can't see the question somehow.
Yeah, but there's also, let's do one more question for this section and move on to the next one, because there's also a question about the green bond standards.
Yeah.
How are the green bond standards being affected by the EU taxonomy? Could you say something about that?
Do you mean the current green bond standards, right?
I guess so, yeah. It's Luis Martinez who's asking the question. I guess he says, so will standards such as the climate bond standards align to the taxonomy, he's asking.
Yeah, I mean, I think these standards will remain. Climate Bonds Initiative, as well as ICMA, so the Green Bond Principles Design Authority, basically, they have participated in the technical expert group as well. So many aspects of the taxonomy are actually already aligned with CBI taxonomies. And we've used much of their knowledge of the different sectors as well. So that is, I think that is, in that way, we try to secure as much alignment as we could. And now it's obviously up to these standards, whether they're changing or not. I think ICMA and CBI have also offered to work already on a EU Green Bond standard if the Commission is willing to move forward with it. And that means, so they've basically said, we stand ready to help the Commission develop a Green Bond standard. So I'm definitely expecting that this will, kind of converge into a standard for green bonds. And maybe one more thing to say on that, because I know there have been worries on the, especially on the real estate side. And we have tried to, at least for now, stay in line with what is currently market practice. Obviously, we're anticipating there as well that the criteria will get more strict over time, because there is still a lot to do on the real estate market. but we've tried, at least for the start, to align, like, to align with the current standards.
I hope that's answering the question of Lucy. Was replying saying, yes, the current ones, I mean the current standards. So thank you, Lucy. For
good.
We're getting back to the other questions as well. So put your Q&As in if you have any. Let's move to the last part of the presentation, because I think it's more about, okay, what's next and who's going to do what, right?
Yeah, I think it's good to get that picture clear, like what is going to happen, when, by who, not only on a larger scale of transition scenarios, but also what is now really what you're being asked to do. And so what you'll see in this timeline, I'm just going to pause quickly talking and going to give you a moment to look at this, because there's a lot of information on it. Yeah, so what you see here is basically there are two streams of work, which is for financial market participants and for companies regulated under NFRD. Timeline runs until 2022. That is when disclosures for companies as well as financial market participants should be in place. Now, we are expecting that the delegated acts for technical screening criteria of the work that we have done will be published by the end of the year. And that other delegated acts will come half a year later. And this financial market participants, and that's relevant, I think, for most of you in the call, will need to report on taxonomy alignment the first time in March 2022 over the book year 2021. Now there's a short time in between. And so I think it's very useful to already start to get acquainted with what is in the current report and in the current taxonomy. Now, also, we know that we're, for company disclosures, we're dependent on NFRD review. Now, ideally, that all comes together, but there is a chance that in the first year, companies won't have reported the data that you'll need. And so I think one of the main concerns that we currently still have as financial market participants is how in this first year are we going to get the data? I mean, if you run a portfolio of 6, 7, 10,000 companies, it will be very hard to screen for taxonomy alignment if you don't get the data from company. And so I think that is one of the issues still on the table. Very relevant, I think, and will also come back in a future consultation. And I'm directly moving on to my next slide, because I think what I wanted to tell you is like in this, maybe let me stay here. In this timeline, there are a few moments that you can still participate in the process, because obviously we've finished our work. But the Commission is obliged they will translate this into delegated acts, and then they're obliged for a market consultation again. So that means around summer, just after summer, they will consult on this delegated act on climate change mitigation and climate change adaptation. And so there's still a chance to feedback on that in that point in time. Obviously, the platform will be in place in September. Taking questions, suggestions, and improvement ideas, and also I think this week or next week, and don't don't hold me to it, because everything is obviously delayed at the moment. But this week or next week, originally the Commission would publish a new consultation on the Sustainable Finance Strategy 2.0. And that is basically an update of the previous action plan with the 10 actions that you might be familiar with. And we'll zoom in much more on actually additional measures, but also on how does this all fit together. Data is definitely a big part of this consultation. So I'll encourage you as well to get into this consultation and react and explain your worries in a way that the Commission can actually understand and do something about it. Now maybe just a bit back to the bigger context. This is so with Taxonomy, we try to make a tool for transition. We try to make a market-friendly tool that helps financial participants and companies to practically align their actions with Paris. And this is 2020 is an absolutely important year for the Paris Climate Agreement. We only have 10 years to go. It's exactly 5 years after the initial agreement. And as you'll see, there are many, if they can happen, there are many big important meetings. And what I find interesting in this dynamic is really the EU-China link. So what we see happening and what we also experienced as members of the TAG is that that China is really ramping up their sustainability plans, especially on renewable energy and air quality. So EU and China are on many parts already aligned, and you see the summit in September, which will be, I think, essential for the success of COP26 in Glasgow by the end of the year. And so it's important to remember that, yes, it's a lot of work. Yes, it's challenging, but it's part of a bigger challenging situation in which we have to reach certain goals together. I'm going to skip this because it's quite, maybe as quick. This is because I get a lot of questions on the international dimension of taxonomy, and these are the countries that have already expressed interest in using taxonomy and are also part of the international platform. There are also still negotiations with Japan, with some Southern American countries that have expressed interest. And so the Commission is hoping to build really a more international standard for green investments and basically lead by example on this. And so maybe to close up, I think for me, beyond the reporting obligations that, I see challenges, definitely. And it's going to be challenging because we have to develop a whole new data infrastructure, basically, on environmental data. But I also I hope that this tool will turn out to be really a tool for change, a tool for transition. And for me, personally, I think there are 3 things that I really think can make the difference, which is first, as I've elaborated a bit on, depth really as a catalyst for change. And especially, I think, in the situation we're going to face with a economy that we basically will have to rebuild in some structures, unfortunately. There might also be opportunities to do that in a way that is helping us not only to rebuild our economy and get the jobs that we need, but also do that in a way that is more sustainable than we're doing it currently. Now, the second one has to do with standardization. And what I think is going to happen, and what I see happening at the supervisors level as well, is that we're basically reducing the over 2,000 ESG indicators that are currently used in the market to a key set of indicators of, I think, 2025 that will be used by supervisors and will be used to report on. And so what that does is it makes the information, ideally, and I think that's going to happen. First of all, it makes it more easier to digest, but it also provides asset owners with comparable information and information that they can add on. So if I am a pension fund, which is in my case, I work at PGGM, quite relevant, but if I'm a smaller pension fund even, and I have only delegated asset managers, portfolio managers working for me, and they all report their CO2 footprint in the same way, I can actually add up their performance and report much easier than it is currently. So I think that is beyond taxonomy. That's also related to NFRD and disclosures regulation, but very relevant, I think, in the bigger picture that we're looking at. And then my last, and that is, it's always a difficult one, but I hope we can it enables strategic planning and dialogue between companies. Because, you know, obviously we've all thought about or executed divestment of companies that we don't want to, which is completely fair if you look at your transition risk, your risk profile of your portfolio. But I think the real change only comes from the fact that we as investors really think along with the companies that we invest in to help them get better and make this transition as a team. And so I hope that Taxonomy will help lead these conversations and improve them.
Well, those are beautiful closing words, Brenda. We're out of time a little bit, and I was thinking about what to do, but to respect everybody's time, I think we should keep it within the hour. So what I would suggest is technically that you leave your line open so that people can continue to put questions in the Q&A.
Yeah.
You close it down, the whole session closes down. So maybe you can leave it open.
I'll leave it open.
another 5 minutes. You can close your mic and your screen.
Yeah.
So I would love to thank everybody. There were moments that we had 85 participants in this session. So thank you all very much for joining. I also saw Esther Vitorino in the call. One of the and both of you, Brenda, Esther, and all the other participants of the tech, thank you so much for the work done so far. It has been under very high pressure, we all know, and it's really going to change our industry completely. Esther also says in the chat, hi Esther. Thank you so much for your contribution also to this report. It's still a huge challenge for the market is now to start working with this.
Yeah.
And sessions like this really contribute to it. And let's make sure that we continue to do sessions like this. To all the participants which are still in the call, please give us your feedback on how you've experienced this session, because this type of webinars is something we have to do in the future. And
exactly.
Any feedback to make this better.
Definitely. We're all learning from this.
We're all learning. And thank you so much, Brenda, for going on this adventure with us for this first webinar. It's quite nervous. So thank you all for joining. Stay healthy. You as well, Brenda. Good health. And thank you so much. We leave the line open for a few more minutes for questions to put in. But for here, we close the conversation. Thank you so much. You're already.
Thank you all for being there.
Thank you. Okay. Bye-bye.